Welcome back to Market Fatafat, and let's keep it going with all the buzzing counters then. But before that, let me welcome Foram M.Chheda, who's joining us on the technical front. Hi Foram, a very good afternoon. Great having you with us. Firstly, let's talk about your counter. That is a very interesting name, Foram. That is Moscow Dog, because all these defense counters have been buzzing away in trade. But in this market volatility, how do you see the stock moving ahead, Foram?
Hi, good afternoon, and thank you for having me on the show. To begin with, actually, we've seen a lot of all these defense stocks after forming highs in July. It had corrected quite a lot. So, particularly, Mazda corrected nearly 34% from its highs, and it formed a base and consolidated for nearly almost 2 months. Now, I wouldn't say exactly 2 months, it's actually more than that. It's nearly a quarter. And post that, we've seen it gradually improving and moving up higher. Currently, the stock price has already seen a good up move from the levels of 3,860 to nearly 5,300. And this kind of a retracement, or even when we saw a lot of stocks today seeing a gap down opening today, turned out to be good opportunities to buy as well. So from an investment perspective, currently Nasdaq yet continues to remain a buy. Along with that, we have also seen good increase in volumes, which is supporting the entire price move. Thus, one can consider it more like an accumulation as well. And indicator like RSI is also showing some positive divergence, which is also adding in bullishness. Thus, I would consider it a buy near the current levels with a very strict stop loss below the levels of 7,400 and can look for a higher potential target towards nearly 6,000. First, it can test 5,860 and post that it's likely to even touch 6,000 levels.
Alright, Mazda Docs likely to touch 6,000 levels, Mazda Docs on the charts for you. But moving on, then the next counter that is in focus today is ABB, and it is in focus on the back of the fact that ABB is likely to acquire power electronics business of Gamesa Electric. Now, the acquisition complements ABB's renewable power conversion portfolio, adding a significant market reach. And on the back of that, ABB is in focus today. Its pyramid of all the morning gains is now reeling under selling pressure, like the rest of the market, trading with cuts of 4%.
Right then, that's about ABB. But moving on in Forum, another beaten down name, or rather the stock is seen to be consolidating, is Maruti Suzuki. Forum, tell us, how do you see Maruti Suzuki on the technical front, and which are the levels that you are tracking?
Maruti has seen a very steep decline, I would say in the past around 3 months. So it formed a peak closer to a level of around 13,540. And post that, it saw a continuous decline and formed a bottom near these levels of 10,700. Now, since October, the stock price has been consolidating, as you rightly made a mention of it, and is forming a base near 10,850. On the higher side also, if you look, the consolidation, the upper range is closer to 11,400. So it's been in this range itself. Thus, currently the stock price has tested the support level, the lower side of the consolidation, and is indicating a positive divergence on RSI. Thus, from an investment perspective, one can consider the stock a very attractive level to buy because the risk-reward ratio also turns out to be favorable. Thus, one can consider buying the stock at current levels with a very strict stop loss below the levels of 10,600 and can look for a potential initial target of closer to 11,400. And once we see a breakout coming in, there are higher targets of closer to 11,900 as well.
Alright then, that's about Maruti Suzuki. But moving on, let's shift focus to ONGC then, because today CLSA has come out with a note on the whole oil and gas space. What they're saying is that OPEC's discipline will be the key in protecting the price floor for the crude oil prices, and CLSA has come out with a note relating that how these OMCs and the companies related to the oil and gas space could be affected with respect to the crude oil movement. What CLSA is highlighting is that these OMCs integrated diesel and petrol margins suggest a bumper Q3 for all the companies, IOC, BPCL as well as HPCL, which may partially be offset by the rising LPG losses. But on the flip side, CLSA has a lot of confidence in ONGC. They are saying that they continue to prefer ONGC, and it is pricing in a sub $60 per barrel mark of crude realizations, with important triggers that can play out in the next 6 to 9 months. And that's the preference coming in from CLSA on ONGC, and hence the stock is in focus today.
Alright, moving on from there, from ONGC to Motilal Oswal, that is holding on to gains of 1.2% in trade today. Tell us, Gaurav, what's the news flow here? Motilal Oswal has done pretty well for itself, but tell us for today, what's the news flow that's powering the stock?
Has really done well in this year. In fact, this stock has been a multi-bagger for investors. In this year itself, the stock has given more than 200% returns, and now the stock is buzzing on the back of the Investec note. Now, Investec has initiated with buy rating and a target price of 1200 rupees on this counter. What they're saying is that this company is a levered player when it comes to Indian equities. Other than that, they are saying that the company has a strong capital market franchise, and at the same time, they also have strengthened its leadership, its brand and distribution. On the back of all these factors, they are expecting company to deliver a PAT CAGR of around 31% over the next 3 years. And lastly, they have also mentioned that change in equity market sentiment is going to be key risk to the investment thesis, but overall the company remains very strong fundamentally, and that is the reason why they are being bullish on the stock. As a result, we are seeing this stock is up more than 1%, so definitely watching out on this counter.
Alright, that's today coming in on Motilal Oswal. But moving on, and Forum, talk to us about Varun Beverages. How is the stock looking like to you?
Well, the stock has remained in consolidation for almost, I would say, 5 months now. In fact, after forming a high of closer to around 680, that is in the month of July, the stock price saw corrective decline. It went below the 200-day moving average as well. However, this bottom was formed in the month of October, closer to around 536 levels, and post that we have seen a very gradual up move, formations of higher tops and higher bottoms. This resulted in the stock price to move above the multiple moving averages of 50, 100 as well as 200. Currently, the stock price, rather last week, the stock price did make a breakout from a downward sloping trend line. However, today there was a gap down opening, which was also a retest of the breakout level. Along with that, trying to take support on multiple important moving averages. Thus, it becomes a good buy at current levels with a very favorable risk-reward ratio. So, 630 current prices where one can consider buying. Stop loss can be maintained below the levels of 600, and one can look for a higher target of closer to around 680.
Alright, 680 could be the targets that one can look out for when it comes to Varun Beverages. But moving on, then let's put the spotlight on Tata Motors, because yes, indeed, a positive news flow coming in by the company as they've secured additional order of 148 Starbus electric buses from BMTC, because the company just a couple of weeks back also announced the orders coming in for the electric bus division from the UP government as well. But now it's the Bangalore Metropolitan Transport Corporation coming out with an additional order, because what the company is highlighting that this order follows an earlier order of 921 electric buses, most of which have been delivered and are running successfully with an uptime of over 95% by BMTC. So yes, indeed, a positive news flow coming in on Tata Motors, and hence the stock is in focus today.
Alright, coming to you, Forum. Cipla is what you have picked out for us. Now, the entire pharma pack has been doing very well. Despite the sluggishness in the market, pharma pack has been resilient. But tell us, Cipla, in the last 6 months, it was in a corrective zone. Last 1 month, it has started moving up 2%. So from here on, what is the upside that you see on Cipla?
As you rightly made a mention that the entire pack is doing very well as on today. So in fact, Cipla particularly did form a high of closer to 1690, 1694 in the month of October and saw a very steep decline. It made a low of closer to 1400. Post that, we have seen the stock price being in, I would say, a wide range. It kind of saw a rebound. However, it is now trying to form a base and now finding its base along with the stability. The stock price is now finding its support closer to 1450 to 1460 levels. However, it yet is below the 200-day moving average, and today it's almost testing those levels. However, such a closing as on today can also trigger some kind of bullishness into the stock along with very good increase in volumes. And the most important part is the RSI, which is already showing a lot of positive divergence and heading towards the overbought or the bullish zone. So overall, the stock continues to see some more bullish momentum that one can even consider from an investment perspective to buy at current levels to around 1500, a strict stop loss below the levels of around 1440, and the potential target initially is closer to around 1570, and post that one can look for almost 1640 as a target.
All right, that's the take coming in on Cipla, but sticking with the pharma, then let's hear out from Deepan Mehta, who is the director of Elixir Equities, where he shares his topics. You listen out, but we'll slip into a very short break right now.
I think pharma is doing well because of its perceived safety, and it is actually quite a safe sector to be in, especially when you are witnessing slowdown in the economy, and there's so much of uncertainty around the global economy as well. So I think investors are strategically going overweight on the pharma sector. Within that, I think I'd go with the largest company, Sun Pharma. Usual disclosure, we and our clients are invested. And Sun Pharma, I think their entire strategy on specialty products is playing out very well. It's scaling up also in a decent way, and eventually it will lead to higher earnings, and the street also will start to pay a higher P multiple for a superior business model. So that's where we are. There are certain other small companies also, again, disclosure, like we like Kaplan Point a lot. Recently, they have won a very interesting approval for eye ointment as well. And again, over here, I think a very focused business on the Latin America, where it has got very strong competitive strengths and complete backward to forward linkages. So I think that pharma as a sector you should be overweight in. Go for the large cap pharma company. I think Lupin also has done pretty well. And then there are a few select mid cap companies. And I would also like to keep Strides on our watch list. Something interesting is happening over there as we await the listing of their other subsidiary company. I think it's called One Source. I'm not clear about the name, but that's something interesting happening over there, which one should keep an eye on.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today in today's trading session. Let's get going then with all the stocks. So coming to you, Gaurav, you've picked out the banking pack for us. Citi's conference from the Citi note coming out on the banks. Tell us what are these banking names and what does the note say?
Yes, there is some pressure in the banking segment, specifically when we talk about secured, unsecured book, and that is the reason why we are seeing some pressure in the banking segment. So first, let's talk about some of the counters like ICICI Bank and Axis Bank, who were there in the Citi's conference. They have got some management's commentary on that. What ICICI Bank is saying is that the non-performing loans in the unsecured segment can stabilize. They are seeing some kind of increase in card delinquencies, but at the same time, they do not see any kind of alarming sign and alarming stress. Apart from that, what they're saying is that the system-wide moderation in credit growth is what we are seeing, can be followed in ICICI Bank as well. But apart from that, cost efficiencies will still be at a play, and OPEX growth is likely to lag the income growth. On the other hand, when we talk about Axis Bank, they have also echoed the same things. What they're saying is that the delinquency, specifically in the personal loan and credit card segment, has been rising, and that is the reason why they might moderate the retail unsecured segment growth. Other than that, they will be aggressively writing off the policy is to aggressively write off, and that is the reason credit cost may rise, and at the same time deposit mix can change, and that is the reason some kind of deposit cost can also increase. Lastly, an important thing that they have highlighted is that when we talk about Q1 and Q3, that is usually seasonally weak for agri segment, what they're saying is that in this Q3 we may see this more evident for this bank, and at the same time they will be focusing on core profit because treasury gains can get impacted because of the investment guidelines that are coming from RBI. So a little pessimistic comment coming up from both the banks in terms of growth, but overall they are being confident on the overall health of the banking segment. But definitely when we talk about the stock performance, both the stocks are down today. So on back of this, we will be watching out on these banks as well as the entire banking segment in coming days.
All right, that's take on the banking space. But with this, viewers, let's also move on and let's hear out from Sridhar Shivaraman of Enam Holdings and his take on the financials.
Barring the top 3-4 large banks, we think that the NPA numbers will be very ugly, especially for the small banks. The NBFCs and microfinance is very well documented, so I don't even have to speak about that. I think what has happened is that Reserve Bank very subtly has asked, when I meet all the banks, what the feedback you get is that very subtly they've asked banks to go slow on incremental lending to NBFCs in general. So what will happen is NBFCs are not going to be able to grow so fast. They're not able to control the growth, so they're basically pushing it through the banks. So if banks don't lend enough, then NBFCs can't grow. I think it's going to be a spiral where they're trying to control the damage as we speak. I think the next 2 quarters is going to be quite ugly.
All right, moving on then to the next counter, that is Brigade Enterprises. That is in focus today on the back of the fact that they have launched Brigade Citrine in Bangalore. Now, that's India's first net zero carbon residential development project. Now, this project has been estimated with a GDV of about 500 crore rupees. On the back of that, Brigade is in focus today. In fact, the entire realty pack has been doing pretty well, and so is Brigade. But for now, it is mirroring the markets. It's trading absolutely flat with minor cuts of 0.1%.
All right, that's about Brigade Enterprises. But moving on, let's put the spotlight on NTPC Green, because there's indeed a positive news flow coming in by the company, when the second part capacity of 30 megawatts out of 150 megawatts of Gujarat solar PV project, that's Gujarat of NTPC Renewable Energy arm, has been commissioned today, and the commercial operation have also started. That's a wholly owned subsidiary of NTPC Green Energy Limited, and indeed a positive news flow coming in on this one, and hence the stock is in focus today.
All right, moving on then, Metropolis is the name that you picked out for us. Foram, tell us what you see in the charts for this counter. In the last 6 months, it has moved up some 9 and 10 odd percent. Last 1 month, it has given really started moving up 5 odd percent. Tell us from here on, where does this go?
If we talk about Metropolis, so overall the stock price is now very stable. In fact, it was in a consistent uptrend till October, where it formed a high closer to 2,318. And post that, we saw a bit of a corrective decline coming in. So this decline almost was closer to a 200-day moving average, and it found its support near 2,000 levels. And post that, we have again seen a consistent up move, more of stability and more of a sideward range. So it has started forming like higher bottoms. However, it is yet in the process of forming a higher top. But since there is a base formation, and instead of going lower, now it's moving sideward, it becomes a very good level to accumulate in small tranches. Currently, the stock price in the recent move also, if we see, has come down from 2,230 to closer to around 2,100 levels, which is again a good level to start buying or making an entry. One can look at buying a partial quantity at current levels. The support level is placed closer to around 2040, so one can consider accumulating as well or add on more at those levels. And when we talk about the volumes, some more volumes have been seen in the recent times in the beginning of this month. And along with that, the parabolic SAR, like an indicator, also is indicating a buy. Thus, I would consider a buy or an accumulate at these levels, or people who have, or investors those who have, can continue to hold with a very strict stop loss below the levels of around 2020, and can look for a higher target of closer to 2,300.
All right, moving on from Metropolis Health to ITC, that is in focus today on the back of an acquisition. Now they have acquired 2.4% stake, a share capital of EIH for rupees 111 crore, and 0.5% of HLV Limited for almost 11 crore rupees from Russell Credit Limited. Now the acquisition was made through a cash purchase from the company's wholly owned subsidiary Russell Credit Limited. Now this move is seen as a strategic step to consolidate the company's presence and influence within the luxury hospitality market. Now EIH Limited is renowned for its Oberoi and Trident brands, operates a diversified portfolio of luxury hotels and resorts across India, and HLV Limited specializes in owning and managing these premium hotels, palaces and resorts. On the back of this acquisition, ITC in focus today, currently declining, has given up those morning gains, is trading towards the day's lowest point with cuts of 0.6%.
All right, then that's about ITC. We're moving on then. Let's now put the spotlight on United Breweries. Gaurav, take us through why is this stock in focus today?
When we talk about this stock, even in this tepid market, this stock is actually gaining in trade, and the reason being that now board has approved cost optimization initiatives. What they have said is that they will be changing the workplace policies on the back of some relevant policies that they will bring in relating to the current market landscape. And at the same time, what they're saying is that they will redesign the supply chain and financial functions. So they will be focusing more on scaling up procurement functions, digitizing breweries, simplifying the process to reduce complexity, and lastly, centralizing financial operations and transaction processing. All these are expected to gain some kind of returns for the company. Now they are estimating 1.5 to 3% savings on the total fixed cost because of all these factors, and they will also continue to identify opportunities to reinvest because of the savings that the company is getting. Lastly, what they are saying is that the impact of redesigning will be appearing in company's third quarter's result as an exceptional item, but specifically because of the positive changes that the company is doing. We are seeing the market is actually rewarding the company with the gains of around 5.5%. So definitely watching out of United Breweries on the back of the positive change coming up from management.
All right, moving on from United Breweries to coming to you, Foram Emami is the name that you picked up for us. Discounter has been in a corrective phase in the last 6 months. So from here on, do you see an up move coming in for Emami?
Yes, however, from a very long-term perspective, now as you made a mention that it has been in a declining or a corrective mode, and the stock price from the levels of around 830 to around 835 in the month of September, the stock price has seen a gradual decline. Now it has been forming lower tops and lower bottoms, but however, the most important thing is the RSI showing a lot of positive divergence. It has now started forming more like a higher top and higher bottom, so which is indicating that it's an initial or a very early entry that one can consider from an investment perspective. As far as the parabolic SAR is concerned, it is indicating in a buy mode, and along with that, even volumes are now gradually picking up. So thus, I am looking more like a contra trade or a contra investment, that okay, now one can start looking from a very attractive price levels to buy. Thus, one can consider buying the stock at current levels with a very favorable risk-reward ratio. So one can consider the stop loss to be maintained at 549, and can look for a potential up move of closer to around 660 levels.
All right, that's the take coming in on Emami. But with this, viewers, we are completely out of time in this edition of Market Fatafat. Thank you so much, Gaurav, Foram, as well as Rajesh earlier for highlighting all the buzzes in trade right now. But with this, me and Ankita will also take your leave. Thank you so much for tuning in.